The fair tax, has everyone heard of the fair tax? How many people think that they're familiar with what it is and how it works? Okay. How many people feel like they have a strong opinion on whether they favor or oppose it? Okay. All right. That's about half the crowd. And I'm assuming most of them are probably opposed. And I do oppose the idea. I don't think it's a good idea. But really, my focus today isn't about whether I oppose or support it. I really want to give you a sense of what it's about, how it works. And also, I'd like to focus on some of the claims that have been made by proponents of the idea, because I think a lot of them are false. They're really giving you information that is not correct. So to really be able to determine whether you think it's a good idea or not, you really need to know the truth of what it's about and what it would do. And I think there's a lot of false information. So really that's my focus today, is to talk about what's been said and why it is or is not true. So that's where we're going to start. Now, I'll give you a little bit of history of my involvement with the fair tax. I'm in the Peachtree City Rotary Club, and someone came to speak at the Peachtree City Rotary Club about the fair tax, and they were a proponent. They were with the organization America's for Fair Tax, I think it's called, that really is out there pitching the idea. And when I first heard it, things didn't add up. I got the sense that there was something wrong about what she was saying. So I started to think about the idea some, and I wrote an article in the Citizen. And it was published, and I was amazed at the response I got. A lot of people know me through the Rotary Club, and I know a lot of conservative people. I literally had people knocking on my door with a copy of the book in their hand, giving it to me, and giving me this, sort of lecture on why I was wrong. And pointedly saying to me, "Did you read the book? Did you read it?" And so I said, "Well, I hadn't read the book. I just heard this lecture." So I read the book. And then I wrote another article in the Citizen saying, "Well, I read the book and I still don't agree with it, and now I actually have more reasoning why not." So I was amazed to see how fervent the belief in the idea is on the side of conservatives. But the other thing I was really amazed to see is how uninformed they were about what the actual effect of the proposal would be and how it works. And so there's a lot of information out there that's incorrect. So that's really my focus today. I do have an outline I'll go through, and if you've got a copy of it, it might help you. First thing on it is, what is the fair tax? And by that I mean, what are the documents that came out? So first of all, the fair tax is the proposal made in this book. And I don't recommend you go out and buy it. If you want a copy, I can lend it to you if you want to read it. It's a very short read. It takes probably 10 hours to read. And it was written by Neil Boritz and John Linder. Then there's a follow-up book called Answering the Critics that they wrote more recently.
Is that the Congressman, John?
It is the Congressman John Linder. So that's really where it was proposed. There's been a bill introduced in the House for the last several years that basically is the fair tax as well, that is based on the book. John Linder, I think, has introduced it. It's a very partisan issue. I believe every Republican member of the House from Georgia supports it. And I believe every Democrat either ignores it or, does not support it. There was some inkling of certain Democrats supporting it, but most of them have sort of backtracked, and there's very little support from the Democratic side. It's pretty much all Republican support. And in Georgia, it's a very strong level of support. So that's the background of what it is, how it was introduced. The basic idea in the book is to replace most of our taxation with a sales or consumption tax. So the proposal is to replace income tax, corporate and individual income tax, FICA taxes, which are Social Security taxes, and the estate tax. Do away with those, and in place to generate the same funds, supposedly generate the same funds, institute a national sales tax or consumption tax. Really means the same thing. So that's the basic idea. There are a few details that we'll go over to give you an idea of what's in the book. It's a fairly straightforward, simple idea. The tax is collected by retail vendors, so just like a sales tax. Every retail vendor collects a tax, remits it over to the government, just like we do on the state side with sales tax. It applies to all goods and services at a retail level. That means if it's new and sold for the first time to a consumer, tax would apply. Now, it's different than sales tax in that it's much broader. It applies to every service, including healthcare services, legal services, and most sales taxes only apply to tangible personal property. It would apply to things like new houses, cars. Can you imagine a tax on a new house? So it's much, much broader than a sales tax in terms of what it applies to. The idea in the book is to set the rate of the tax to be revenue neutral, to replace the taxes that it would be doing away with. And they claim that the rate would be 23%. So we'll talk a little bit about that. The rate really would end up having to be quite a bit higher, or we wouldn't generate the revenue that it's replacing. And then there's this issue in there of the way they quote the rate. They quote it as an inclusive rate. So what that means is, if I go to buy something and I pay $1 for it, typically with sales tax, they'd add the sales tax to it. So you'd add 6% or 7%, whatever it is, on top of that $1. With the fair tax, the way they propose to do it is that it's included in the price, and it's an inclusive rate. So that sort of skews the rate a little bit. So if you were to pay $1 for something, 23 cents would go to the tax, and 77 cents would be kept by the vendor. So that's 23% of the total goes to the tax. But if you think of that as a percentage that's on top of what the vendor gets, 77 cents, it's really a 30% tax. Okay, so in other words, if I had to pay $1.30 for something, only $1 would go to the vendor and 30 cents would go to the government. So really, it's in terms of the way a sales tax is normally quoted, it's a 30% rate that they're proposing. And as I'll talk about later, that 30% rate is really off for several reasons. There's a prebate, and this is an idea. Typically, sales tax is very regressive. As you can imagine, you're taxing consumption, and obviously, the less money you have, the more of your income is going to go to consumption. So to partially offset that, there's this idea of a prebate. And the way a prebate would work is you file a return with the government that says, I have 3 dependents, and so there's 5 of us, and there's a level that's supposedly the level of poverty that they would establish. So for a family of 4, the level of poverty is X. Well, the government would then send you a check every month that would equate to, if you were spending the poverty level only, how much tax you would pay. So it's to offset that tax. So in effect, what would happen is there's 0 tax on what you spend up to you hit the poverty level, and then it's a flat rate above that. So you get this prebate. And some people have criticized that it's really like the largest welfare program has ever been, because everybody gets a check, and there's a lot of administration in that. But the idea is to somewhat offset the sort of ultra-regressivity, but as I'll talk about later, it's still going to be very regressive, especially on working class, middle class. So that's the idea of the prebate. The other thing that came up, and they talk about in the book, is right now states piggyback on our federal income tax system. So when you file your state income taxes, they use federal taxable income as a starting point. So you don't have to go through the process, and the state doesn't have to go through the process of calculating your income for the purpose of state income tax. Well, they'll lose that because there's no federal income tax. So the idea is then states could piggyback on this. So state income tax would almost be forced to also be replaced with a state sales tax. We have a state sales tax now, but it would be a higher one to replace the state income tax as well. So we'd really be, straight across the board sales tax. And there's a lot of reason why having one form of tax as the predominant tax is not a good idea. It's kind of like the 3-legged stool. Different times of the economy, it would cause more fluctuation. It's just not a reasonable way of taxing. So that's the gist of how it works. Does anyone have any questions about the system, what's proposed in terms of just the mechanics of how the tax would work?
I'll wait till later.
Okay. All right. I've got... sure.
You talked about the inclusive and the exclusive.
Yes.
Fully understand.
Uh-huh.
How is our income tax rate quoted? Is it quoted inclusive or exclusive?
Income taxes are generally going to be quoted inclusive.
Okay. So when you're comparing the 23%, to to our income tax rates, that 23% equates to the taxes that you would pay on your earned income. You know
Well,
what I'm trying to get at is.
yeah, no, I understand exactly what you're trying to get at.
You're trying to up to 30%, when really when you're talking against income tax rate,
Right.
it's inclusive.
Well, I have never heard anybody quote a sales tax inclusive before the fair tax. I've never heard anyone quote an income tax exclusive. It's just the way that those taxes are typically quoted. So when you think about what a sales tax is and what a sales tax rate is, the comparable number would be the 30%.
But I guess what I'm trying to get at is people that are saying, oh my God, I only pay 15% income tax rate.
Yeah.
I make X number of dollars, 15%, now I'm gonna be paying 30%. Okay?
But it's not even on the same thing, so
Well,
it's not really a...
It isn't, but people are gonna think that way.
Mm.
Yeah.
Okay. Yeah?
Employer portion of Social Security,
Uh-huh.
what's happening there?
There would be no Social Security tax. So there would be no employer portion or employee portion.
That's gonna have to be absorbed into the consumption tax.
Right, right. It would do away with FICA tax. So what she's talking about is when you have an employee, the FICA tax is paid, it's 7-point-something percent that's paid by the employer, and then the same amount that's withheld from paychecks that's paid by the employee. And neither of them would be there. If you're self-employed, you pay both of them yourself. So,
Yeah. Yeah, you mentioned that the tax was a retail tax, a consumption tax.
yes,
But is it my understanding that if you were to purchase something at retail for resale or for production to sell again, then you would not be taxed.
right. That's not at retail. If you're purchasing something to resell it, it's by definition not at retail.
Okay, so that, even though that would be like you go to Sam's or some wholesale club,
Uh-huh.
then you would not, those persons who would sell for resale would not be taxed, is that the
Right.
case?
The same as a sales tax is now. So the way a sales tax works is all along the supply chain there's no tax, but at the end the whole amount's taxed. So you could compare it with an income tax or a VAT tax where along the process there's each incremental value is going to be taxed. With this tax, like a sales tax, anytime you're buying something to resell or that would be an ingredient part in something you're going to resell, there's no tax. But at the end, the entire amount that's sold to the end consumer is taxed.
Okay.
Now, for example, a used car would not be taxed because it's already been taxed once. So everything is designed under this system to be taxed only once. It's very similar to the way sales taxes are now. So,
Can you briefly explain why the proponents love this so much? Why they're so fervent? What's the big golden prize?
And I think
that they
going
they
through the
get?
claims will give you a sense of that. Because and I'll tell you, the book is very persuasive. If you read it, there are some just absolutely false statements in it. But if you take those as true, it sounds great. It's kind of like, and we'll go through this.
Yeah.
It's free money, exactly. It's sort of this have your cake and eat it too type of a thing. So it sounds very good. And if you read the book and then start to study it some, it's interesting. It's an interesting exercise in seeing how somebody can persuasively argue for something that really doesn't have a lot of merit to it. But when you read it, it sounds pretty persuasive.
But don't they know that these pitfalls are there? Why do they try and push it, even though they know, for instance, I know they say, well, the price of everything will drop by 30%. So actually, you won't be paying anything more because
Right.
all the
Well, we'll get into that.
fast food
I
hamburgers
think
will
most
cost 30% less,
supporters don't hear both sides,
Yeah.
and so they don't understand the argument against it. And if you've read the book, and that's all, just like anything, if you only hear one side, you are probably not going to be well informed about it.